One wants to invest in countries that have good finances, good income statement, balance sheet, earning more than they spend, and have good because they can withstand disruptions better financially, and they'll be more productive.
Long-term goals are those that you would like to achieve in the next 7 to 10 years. Therefore, when looking to choose the best investment option for the long term, you may choose options that are volatile, but have the potential to generate high returns over the long term. That being said, you need to decide what type of volatility you can go through and choose your investment options accordingly. In today's video, we will tell you about Ray Dalio's thoughts on where people should invest in 2023. But before we get into the video, make sure you subscribe to our channel and press the bell icon to never miss an update. One who wants to invest in countries that have good finances, a good income statement, a good balance sheet, or that earn more than they spend because they can withstand disruption, be better off financially, and be more productive without major internal conflicts. In these cycles, there are short-term cycles that accumulate to create a long-term cycle. So, for example, we're used to what's commonly known as the short-term business cycle or debt cycle, where there's a recession when economic weakness is accompanied by economic weakness and low inflation. And then the central bank grants credit, and that stimulates activity. And then there's the recovery and the good times in the economy, but then inflation increases and tightness and so on. So, we have a lot of debt assets and debt liabilities. But one man's debt is another man's asset. Therefore, we must keep interest rates high enough to offset inflation, because if you don't, no one will want to lend and we will have a problem. But interest rates must not be too high to break the economy. So, when you have debt, a lot of debt assets, and a lot of debt liabilities, it's not easy to have that balance. And because we had the imbalance, the central banks of the world had to step in and be buyers. They had to print money and buy that debt to break even at an acceptable interest rate. So we have this problem that caused the inflation, and now we have the financial problem that is also related to what is happening in the world order. We are in this place. What happened during this period was that a lot of government debt was sold, and it was sold to a lot of buyers. So when looking at the Silicon Valley's banking situation, it's important to understand that this is just one example of many where short-term borrowing was used to finance the purchase of a large number of government bonds and beyond bonds, beyond the mortgage payment, and also corporate bonds, and so on, because the money was given away free. The government interest rate was 0.7%. Lower quality loans carried an interest rate of around 3.5%, but they also had interest-only loans. You really didn't have to pay anything to get the money. So we have all this debt, and now government bonds have gone down and are being funded by short-term debt, which has increased the cost of money. Now, it's not just the banks. It's not just the United States. It is a worldwide phenomenon. It existed in Europe because the central banks of Europe provided money like that. Imagine that they create negative interest rates for money. So, how can someone make money by holding a negative interest rate bond? The way it does this is that it has a more negative short-term interest rate that it borrows to finance it. And that's what happened. And that's what we got. So, if you got the qualification to trade the bonds at existing rates, you have a lot of terribly financially impacted negative net worth entities around the world. The world has been leveraged for a long time. So we have this dynamic at the same time. And that's the financial dynamic.
When you look at Silicon Valley Bank situation, it's important to understand that that's just one example of an enormous number.
That's all for today. Let us know your views in the comment section below, and don't forget to like this video before leaving. Thanks for watching.